Yo, what about that entrance? Ladies and gentlemen, welcome back to another episode of the Jack Mallers Show. My name is Jack, and this is a Mailbag Monday. Off we go. I'm talking to you all with a Bitcoin price of $103,880 US dollars. Bitcoin's market cap remains slightly over $2 trillion at $2.07 trillion. All-time high is still $111,980, and it is Bitcoin block height 902,457. How are you guys doing? For all of you that I saw in Prague, it was great to see you. What an amazing conference. That was one of the most raw and emotional keynotes I've ever done. It's got to be up there with El Salvador. So for those of you that were in attendance and shared that with me, that was super special, and I really, really appreciate it. Okay, the best feedback, the biggest feedback I always get on these shows is to just get started, so I will just get started. If you've been living under a rock, even if you've been living under a rock, I think you know the U.S. struck Iran. Okay, so this is from President Trump. We have completed our very successful attack on the 3 nuclear sites in Iran, including Fordow, Natanz, and Esfahan. All planes are now outside of Iran airspace. A full payload of all caps bombs was dropped on the primary site, Fordow. All planes are safely on their way home. Congratulations to our great American warriors. There's not another military in the world that could have done this. Now is the time for peace. Thank you for your attention on this matter. Okay, my very quick disclaimer. Every week, this is not a politics show. This is not a show about war. The Jack Mallers Show official opinion on war is that I do not like war. We do not like war here at the Jack Mallers Show. We do not like violence. We do not want to waste human life on the monetization of assets. That is our official stance. It doesn't really matter the context. I'm not a violence guy. With that being said, this stuff's relevant to understanding the world and understanding Bitcoin's path to saving it. So we go on. For those that don't know, Israel and Iran have been in conflict. It's greatly affected financial markets. Gold has caught a bid, which we'll talk about in a bit. It's impacted Bitcoin's price and just the overall geopolitical tension. My general opinion on war right now is every time a missile is shot, everyone's like, is this World War III? And, you know, we've kind of been in that, wait, is this about to be World War III? Since COVID. You know, that's how it felt with Ukraine and Russia. That's how it felt when we sanctioned Russia. That's how it's felt in the trade wars with China. I think we've entered this fourth turning, this new regime of humanity where the current reserve currency status is no longer tenable and it's no longer in the best interest of anyone. You know, there's that famous saying that, you know, if goods and services don't cross borders, bombs will. When the world is freely trading and trade flow is flowing and everyone's in agreement and in alliance and everyone's economies can grow, us humans can innovate and build tools and there's natural deflation. When that's not the case, you see a lot of violence. So for me, I don't think that this is World War III. I'm always fading the idea that, oh my gosh, this is World War III. I've been fading that since COVID and I've been long Bitcoin. But let's go on to the next slide. In regards to finance, so again, I'm not going to sit here and comment on war, who's right, who's wrong, whether Trump's a good or bad president. That's not my job here, nor am I really interested in that. I vote orange, I bleed orange, I work on orange. I thought this tweet from Macroscope, by the way, great Twitter follow. If you guys are interested, great Twitter follow. I thought this tweet was fascinating and I agreed with it. In coming days and weeks, we may see how much of the recent bid under gold and the ceiling on Bitcoin can be explained by anticipation of military action in Iran. My guess, probably substantial for both assets. Gold usually knows if there's a war premium that starts to unwind, watch for Bitcoin's outperformance over gold and other assets to resume. For now, geopolitics are obviously key. Bitcoin holders are right to question why it remains sensitive in short term to geopolitical and other market impact news. The answer is that Bitcoin still has a risk component, especially in its ownership base. As it continues to mature as an asset and supplants gold's traditional role, this should gradually fade. So let me break this down. First and foremost, what Macroscope is referencing is that in times of war, gold has caught a bid, and that's especially true now. The risk-off safe haven asset is no longer the U.S. bond market, is no longer the U.S. Treasury, it's no longer the U.S. dollar. This is a very, 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 very important point to make. Over the last few weeks, the dollar is only gradually caught a bid, barely, but it's a rounding error. And if you hadn't been paying close attention, you hadn't noticed, which is very rare, but it's super important. We're clearly in a regime change where people are not rushing to the US dollar. They're not rushing to the US Treasury. Treasuries have risk now, and I'll get to that later. Gold is the new safe haven at the central bank and sovereign level. Bitcoin's not big enough yet to catch that bid. We've talked about that on this show. It will get there, but for now it is gold. And the other thing that Macroscope mentions in this tweet is that Bitcoin still has a risk-on component, and this is what's keeping it correlated to the stock market. Why is that risk-on component still there? Well, a lot of its holding base is still risk, meaning this. I've been in Bitcoin for 13 years. I remember in the 2016, 2017 bull cycle, we were cheering on these hedge funds that were going long Bitcoin. These massive hedge funds that hold, a huge portfolio of risk assets, they started to include Bitcoin in their risk portfolio. Now, we're starting to see sovereigns. We're starting to see the MicroStrategies. We're starting to see nation states come under and replace that bid. But there's still a decent amount of Bitcoin's holding base that are toggling risk on, risk off, and treating Bitcoin like, an equity like the S&P 500 with some alpha, okay? And so I couldn't agree more with this tweet, is that gold caught a bid because everyone knew that the United States was going to interfere at some point. Trump had to make a move. The way that he's been managing geopolitically is that he cannot be faded. They called his bluff and he had to play a hand. So he played a hand, but the markets were capping Bitcoin's upside because of some risk component, and gold caught a bid. So let's now go on. I also like this tweet from Arthur Hayes. Did you hear that? It's the sound of the money printers revving up to do their patriotic duty. This weakness shall pass, and Bitcoin will leave no doubt as to its safe haven status. I liked this tweet because here's another thing, guys. Do you guys remember Doge? Anyone remember Doge? It feels like it's been a decade. It's only been about a week. During all this wartime, all these missiles being shot, all these bombs being dropped, have you seen anyone question, whoa, what's our defense budget on that? Whoa. I don't like how much that plane cost that had to fly over and destroy Iran's nuclear program. Never once did I hear that. Never once. We spent all that wasted time listening to Elon about how he was going to save our budget, run the U.S. like a startup, and we were going to cut defense spending. We were going to cut all this spending. And it's get out of here, Elon. And now it's time to actually drop a bomb on someone. Guys, I didn't see one American, one news outlet. It is hard to get all Americans to agree on something. Left, right, up, down, blue, red. I didn't hear anybody say, don't print the money, don't send the jet. I mean, these planes, it costs like a quarter, it's like $100 million to fly this thing to Iran and bomb a nuclear plant to make a point. I'm talking out of my ass here. I have no idea. Nobody cared about how much it cost. Nobody was like, whoa, let's focus on Doge. That shit is so dead and gone. That shit is in the trash. Get out of here with that. No one cares. We're printing the money. And I thought this tweet was hilarious. Do you hear the money printers revving up to do their patriotic duty? Guys, no one who's jobless, who's desperate, or who feels in danger has ever voted for austerity. They've only voted for printing the money. Only, ever in human history. So Money printers revving up to do their patriotic duty. And again, whether this is actually our patriotic duty, that's not the point of this show. It doesn't actually matter. None of this shit actually matters. In no circumstance across the history of humanity is it ever patriotic to go murder somebody. We should all not waste human lives on the monetization of all this dumb shit. Should just move to Bitcoin and peacefully go about our ways. But until that point, this is just the reality of the situation. But I wanted to make the point that all this Doge, all this cut, all this Elon, man, that shit felt like a decade ago. I haven't heard that shit once. We dropped all these bombs. We got to prepare for World War III. Not once is anyone caring about the fiscal situation. We go on. Now, to cap this, it was relatively short. This was a post from Trump. This was today. Iran has officially responded to our obliteration of their nuclear facilities with a very weak response. This guy's so funny, which we expected and have very effectively countered. There have been 14 missiles fired, 13 were knocked down, and one was, quote, set free because it was headed in a non-threatening direction. I am pleased to report that no Americans were harmed and hardly any damage was done. Most importantly, they've gotten it all out of their system. I mean, this guy's talking about another country like they're a toddler. They've gotten it all out of their system, and there will hopefully be no further hate. I want to thank Iran for giving us early notice, which made it possible for no lives to be lost and nobody to be injured. Perhaps Iran can now proceed to peace and harmony in the region, and I will enthusiastically encourage Israel to do the same. Thank you for your attention on this matter. And he followed up, this guy's laugh out loud funny. Congratulations, world. It's time for peace. He had just dropped a bomb on somebody. Just so funny. So anyways, the point of this that I wanted to bring up is right here. So we had talked about, did gold catch a wartime bid, and was that going to unravel? Today, gold is down on the day. Was Bitcoin capped because of fear and uncertainty, and was it going to catch a bid with the aftermath of this being resolved? Bitcoin's up 3.5% today. So to me, what's absolutely fascinating is the role that Bitcoin already plays in the global financial market. This is the price action of oil. So let me quickly tell you guys why this is relevant. To make a tremendously long macroeconomic geopolitical story short, Iran is very relevant when it comes to oil. So if Iran wanted to actually retaliate in a very severe manner, they would have shut off a lot of the world's access to oil. They supposedly control about 20% of global oil flow, so it wouldn't have just impacted the US, it would have also impacted China, Russia, Europe especially. The whole world would have had to get involved because oil prices would have spiked. That would impact Main Street. Energy prices would go up. It would have gotten really, really nasty. And so if Iran really wanted to make this a world war, they could have hit everyone where it hurted, which is not in some other site somewhere else after they told everyone else to evacuate. It would have been, hey, oil prices are going to go up. Go explain that to all of your voters. And now everyone has to come to the table and start negotiating or start dropping bombs on each other. The market started to price that in. So you can watch, this is the oil chart. Oil price surged 5% at market open after the U.S. strikes. U.S. anticipates Iranian attack. So you can see it wane and fall. And then boom, another spike because it was unclear if Iran was going to retaliate. And then when we heard what the retaliation was and the fact that it was kind of like a fake phony, told you we'd get you back, but we really didn't, oil prices drop. And so this is, guys, prices are what you guys should know about financial markets, just markets in general. Price is information. All a price is information. How much is this thing worth to the rest of the world? When you look at financial markets like this is telling you information. This is the world trying to figure out what is going on when it comes to war, geopolitical tensions, the West versus the East, et cetera, et cetera. Now, I just walked you through that, and I want to pull up Bitcoin. The coolest thing about Bitcoin is Bitcoin knew it first. Bitcoin knew it first. Fascinating. And I'll explain to you why. So if you look at this chart, Bitcoin is just the inverse. So it begins to fall on the strike. It begins to fall when the world really thought that Iran was going to threaten everyone's access to oil. And then as soon as the world started to figure out Iran's not retaliating, that's bullshit. Bitcoin's back. Bitcoin's back. And the reason that this is so fascinating is a few things. People say that Bitcoin serves no utility to the world. It's just bytes of data. That couldn't be further from the truth for a lot of reasons. One of the more fascinating reasons is Bitcoin is the most active, liquid, global voting machine for all of our time and energy around the world. Bitcoin is the most accessible truth machine we have. And the reason for that is it's the only real free market we have left. It's the only thing that has successfully been distributed to the hands of the people. So gold, by the way, guys, is not in the hands of the people. Over half the gold supply is in the hands of institutions, banks, and governments. So Bitcoin, somehow Satoshi was able to successfully distribute Bitcoin to the hands of all of us, to where it is a 24/7 peer-to-peer marketplace where we can all collectively express how we feel about the world, about time, energy, the future. And so when you watch Bitcoin fall, is it risk on? Is it risk off? I actually think that that stuff is less interesting. I understand why people want to ask me questions on it and stuff, and I get it. It's correlation to the S&P 500. But to me, watching Bitcoin sell off, so I was in a meeting this morning. So it was fascinating. I was in a meeting this morning, and I go, oh no, Iran retaliated. So how do you know? Bitcoin's at 99. I knew because Bitcoin knew first. Bitcoin's at 99. By the end of the meeting, I say, oh, everything must be fine. It seems like we're all going to move on and find some deal. How do you know? Bitcoin's at 103. How cool is that? That, guys, you open Twitter, you don't know what's AI, what's fake, what's real. You don't know which reporters are legit. I know the truth with one tab open, the Bitcoin price. That's all I need to see. So Bitcoin is the expression of how us humans feel about the future. How cool is that? How do you not want to be long that? How do you not want to save in that? The most liquid, accessible truth machine that we have that has such moral laws protecting it. You cannot censor it. You cannot inflate it. You cannot counterfeit it. You cannot confiscate it. You cannot steal. It is a moral, ethical, accessible truth machine. How amazing is that? I just thought it was fascinating. So, my take on the U.S. strikes and Iran's retaliation, I think Bitcoin, I've been saying this, I still think Bitcoin ends this year 200, 250K. I think it's going to severely outperform gold, which I'll get more to in the back half of this show. I think gold catches these war bids. Gold catching that bid aggressively told us that the U.S. was very likely to get involved. There was no doubt about that. The U.S. did. Bitcoin knows before any other market, prices are information. Remember that. A price is information. It's data. It's telling you something. Bitcoin tells you the most. It is a utility for this asset class that the world is picking up on. The world is picking up on this. If you want liquidity on a Sunday night because Trump is going to drop a bomb, there's only one asset that gives you the liquidity and the global access and access to truth, and that is Bitcoin. Okay, on the back half of all of this, I thought this was pretty eye-opening. This is gasoline prices. So you can see gasoline prices are beginning to spike here going into July. If these prices remain, this will be seen in the CPI. Why is this super relevant? This is very relevant because Trump really, really wants interest rates to go down. Can't wait to play this video for you guys. But Trump really wants interest rates to go down. He really wants the CPI, which is the bullshit, garbage, totally fake, manipulated, malicious index to measure consumer prices. If CPI remains low, Trump's argument that there's no such thing as inflation in America, please slash the rates, give me cheaper interest costs on all the debt that I have. So when Trump saw this, I just wanted to point this out to you guys. I thought it was pretty funny. To the Department of Energy, drill, baby, drill, and I mean now. So literally, as soon as this new data comes out, this guy gets right to Twitter fingering. Now, this one at the bottom is the most fascinating because it tells us a lot. Everyone, keep oil prices down. I'm watching. You're playing right into the hands of the enemy. Don't do it. Interesting. A lot of thoughts on this one. First of all, oil prices are down. If oil prices go up, you're the enemy. What does that mean? Because, in a free market, there's no such thing as the enemy. There's no enemy. There's no good or bad, right? Like a truly free market, it just is. The way prices are expressed are the way people feel. And so there's no such thing as the enemy. So first of all, Trump implying that he needs oil prices down, this is very clearly his way to control inflation. So listen, a weakening dollar is highly inflationary, right? Rotating to a neutral reserve asset, highly inflationary. We've talked about this on the show. Bringing manufacturing back to the U.S. and bringing it back to domestic production and being an exporter again, highly inflationary. Tariffs, in many instances, highly inflationary. How does Trump plan to combat that level of inflation? Well, this tweet tells us a lot. He plans to try and artificially cap the price of energy. Another thing, in markets, there's no such thing as everyone wins. For every winner, there's a loser. For every sat you stacked, someone had to sell it to you, right? And so Trump also tells us who one of the losers, one of the losers is the oil producers, those in the energy sector, right? You guys, listen, I'll tell Mr. Trump, do you want to know how to get more people to drill for oil? Let the price go up. You guys want to know when Bitcoin miners start to come online? Let the price go up. It's uneconomical to drill for an asset that it costs more for you to produce than it is to sell at market and recoup your costs. So it was just a very fascinating string of tweets to go and see that this was potentially going to impact the CPI. We know his feud with Jerome Powell. And then he immediately goes out and claims these people as the enemy, which is interesting, fascinating, tells a lot about how he's going to use oil prices, how he thinks about them. Because, by the way, rising oil prices benefit the U.S. energy industry, which feeds into manufacturing, which feeds into domestic economic strength. So it's just there's no such thing as an enemy. It just depends on your vantage point. It depends on your viewpoint, right? So I just thought this was really interesting. Like, if the U.S. is going to try and suppress oil to control the inflation and the dollar's stability, he's going to hurt domestic producers. Domestic producers are going to, if you're going to put a lot of price pressure on oil, then those locally here in America, that's not good. You imagine if someone was artificially suppressing the price of Bitcoin, how would Bitcoin miners feel about that? They'd be under a lot of stress, wouldn't they? So I don't know. You can't simultaneously want to be energy independent and suppress energy prices. I'll end it with that. Does that make sense? It's constant. We want to be energy independent. We want to be energy independent. And so it's interesting. It's like, don't judge a man on his words, judge a man on his actions. So we'll see. But on the back half of all of this, a lot of volatility in oil, and to see something that almost is going to impact CPI, which we know how Trump feels about that. He does not want rates to remain this high, to come out and point a finger at the enemy and saying, I need this number down or else you're a bad person. This told us a lot. We'll come back to this, I'm sure, over the coming weeks. I'm sure this will continue to be a hot topic. Okay, man, this is an all-timer. Strap in, pay attention. This video is got to be one of the greatest of all time. This is Trump on the Fed, Jerome Powell, talking about CPI, lowering rates. They are saying the quiet part out loud. Here we go.
Doing well, and as a country, if the Fed would ever lower rates, would buy debt for a lot less. It's a shame. This guy, do you ever have a guy that's not a smart person and you're dealing with him and you have to deal? He's not a smart guy. He's worried about inflation. I said, that's right. If there's inflation in 6 months or 9 months, you lower the rates or you raise the rates. You can do whatever you want, Brian, right? So let's say there's rampant inflation, which there's none. You know what there is? There's success. I got a call from Congress last night. Sir, there's a problem. I said, what is it? Money is pouring in. We don't know how to account for it. I said, check the tariffs. $88 billion came in from tariffs. No inflation. And it's going to get even more so. I know what I'm doing. So we have a stupid person, frankly, at the Fed. He probably won't cut today. Europe had 10 cuts, and we had none. And I guess he's a political guy. I don't know. He's a political guy who's not a smart person, but he's costing the country a fortune. So what I'm going to do is, he gets out in about 9 months. He gets fortunately terminated. Biden, I would have never reappointed him. Biden reappointed him. I don't know why that is, but I guess maybe he was a Democrat. I got great advice from Mnuchin on this one. Great advice. But he's done a poor job. So we have no inflation. We have only success. And I'd like to see interest rates get down. Now, Biden did a lot of very short-term debt. So we have short-term debt coming due. And because of this guy's rates, if he'd lowered a point, I'd pay about a point less. Then if he'd lowered 2 points, I'd pay about 2 points less. And that's for 10 years, 12 years, 15 years, 5 years. It's hundreds of billions. It's even trillions of dollars that we're going to lose because of this too late. I call him Too Late Powell because he's always too late. I mean, if you look at him, every time I did this, I was right 100%. He was wrong. Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I?
I'm dealing with a stupid person. All right. I mean, if I had the time, I'd play you guys the full 5 minutes. It's laugh out loud funny. You should go check it out. Hilarious interview. All right. Let's break a lot of that down. First and foremost, the most important part, Trump said at the end, yeah, too late, Powell. Stupid guy, this guy. Stupid. Listen, too late, Powell. What I think that at the end, Trump's was Trump's most valuable admission. At the end, he said, Biden loaded up on short-term debt. Let's unpack that. What he's referencing is Janet Yellen issued a lot of T-bills, the things stablecoins buy. This is not 10 years, right? She didn't auction off 100 years. No one wants to buy long-term debt of the United States. We've talked about a lot on the show. Why would you lend the United States money for 10 years at this point? Doesn't make sense. Everyone's fleeing out of that. The 60-40 portfolio is dead. Bonds are dead. Okay. So the way Biden financed the country is with short-term debt. Now, obviously, short-term debt comes due sooner. And so they have to refinance this debt. They have a lot of interest payments that are becoming very expensive. If you owe trillions and trillions and trillions of dollars and your interest rate is 4.5%, that's not a cheap bill. And especially if you're a country that operates in a structural deficit on purpose, how are you going to pay for that? And so what Trump is saying, he's admitting the quiet part out loud, which is I need rates to come down. Let me phrase it differently in layman's terms. I need the cost of money to come down because I'm in too much debt and I don't know how to pay for it. Think about that. The president of the United States is saying, I need the cost of money to come down, implying future inflation, implying like the things that we all work for. You get up, you get out of bed. Everyone's had that alarm clock that they wish they can hit snooze, but you can't. You get up and you commute to work and you work your ass off and you come home and your kids want shit and your wife hadn't made dinner and you just are grinding for a future. And he wants to lower the cost of money, debase the currency because of the debt. Fascinating admission from the President of the United States. Then the other admission that he made is how at odds he is with the Federal Reserve and that we're living in an era of fiscal dominance, increasingly so. Fiscal dominance meaning that the macroeconomic environment and a lot of economic decisions are driven from the U.S. Treasury and the U.S. government and how they're going to finance themselves, not the quote-unquote independent bank at the Federal Reserve. And we've seen these two fighting, and Trump has been very, very aggressive at trying to get Powell out of office and even bringing up the point, and this is very important because I'm about to reference it in a second, bringing up the point, can I appoint myself? How much control do I have over the Fed? Am I in charge? Okay. Let's go on. Too late Powell complains about costs, much of which were produced by the Biden fake government. But he could do the biggest and best job for our country by helping to lower interest rates. And if he reduced them to the number they should be, 1% to 2%, that numbskull, this guy, that numbskull would be saving the United States of America up to $1 trillion a year. Pause. Guys, the president is trying to reduce the artificial cost of money because of the debt interest payments that he has to make. How insane is that? But you got to get up and go to work tomorrow. Fuck these people. Anyways, I digress. I fully understand that my strong criticism of him makes it more difficult for him to do what he should be doing, lowering rates. But I've tried it all different ways. I've been nice, I've been neutral, and I've been nasty. And nice and neutral didn't work. He's a dumb guy, an obvious Trump hater. Who should have never been there? I listened to someone that I shouldn't have listened to, and Biden shouldn't have reappointed him. We have virtually no inflation. Our economy is doing really well and will soon be doing with tremendous tariff income coming in and factories being built all over the country better than it has ever done before. If he was concerned about inflation or anything else, then all he has to do is bring the rate down so we can benefit on interest costs and raise it in the future. And if these other elements happen, which I doubt they will, don't say that you think there will be inflation sometime in the future because there isn't now. But if there is, raise the rates. We should be at the top of the attached list, not the bottom. I don't know why the board doesn't override this total and complete moron. Maybe, just maybe, I'll have to change my mind about firing him. But regardless, his term ends shortly. Next slide. Very shortly after this, the Financial Times. Germany and Italy pressed to bring $245 billion of gold home from the U.S. Trump's attacks on the Fed and growing geopolitical risks reignite public debate about repatriating bullion. Wow. Quote, we are very concerned about Trump tampering with the Federal Reserve Bank's independence. Our recommendation is to bring the German and Italian gold home to ensure European central banks have unlimited control over it at any given point in time. Not your ounce, not your gold. Not your keys, not your coins. And then take a look at the central bank's gold reserves. The U.S. obviously in the lead. Those that don't know, the U.S. had 2/3 of the world's gold after the world wars when we set up Bretton Woods. That number has come down, but what's not being missed, the signal through the noise. This is why you guys watch the Jack Mallers show and you tune in every Monday to Mailbag Mondays. Trump is fighting with Jerome Powell, and it's all funny, and he's a comedian, and he gives us good sound bites. But to see other countries say, "Give me my gold back," what's the signal? Trust in the dollar system and the current financial system is eroding. We're moving toward a neutral reserve system. Guys, this also says to you, hold your own Bitcoin, not your keys, not your coins. I fundamentally believe that there's going to be an erosion of trust. Personal responsibility is at the nucleus of us bringing back any sense of harmony to society. Personal responsibility is a difficult but good thing. And so to see central banks and sovereigns going back to self-custody, and it's because they're losing faith in the establishment, which, by the way, is the way it should be. This is the Triffin's dilemma. No country and no currency should be responsible for upholding the global financial system. Us humans have been and should continue to be governed by the immutable laws of Mother Nature, not by some unelected or self-appointed bank. Let Mother Nature govern us. Gold is governed by Mother Nature because it's a natural element that we found in the ground. Bitcoin is governed by Mother Nature because of proof of work. So let our time, energy, effort, labor, and trade be governed by Mother Nature, immutable laws we were born into on this world. Forgive the unabiding trust in some unelected financial institution. And so to see this unravel in real time, you watch this guy give interviews and you understand his logic. Trump's worried about his interest payments. He's worried about the debt and the fact that the central bank and the government don't agree is causing everyone to pull their deposits. Are we going to have a run on the bank? Is the gold there? We asked for an audit. We never got it. An audit of Fort Knox takes 18 months. How long do you think it's going to take Germany and Italy to get their gold out? 2 years? 5 years? You have to account for it. You have to send a ship to go get it. Can you imagine if we were on a Bitcoin standard? The withdrawal would have had 6 confirmations 7 hours ago. Wouldn't have even need to publish this article. Fascinating. Bitcoin is so much better than gold. So much better than gold. Another Financial Times article. Central banks are beginning to fret about dollar swap lines. And it's an article that goes into pretty decent detail about how if there's a liquidity crisis, that other central banks around the world are really, really worried that the U.S. government is going to shut down the pipes. Another one, quiet part out loud. The PBOC head, so PBOC, People Bank of China, imagines new world currency order after dollar era. Whoa. Quote, in the future, the global monetary system could continue to evolve toward a situation where a few sovereign currencies coexist, compete, and check and balance each other. Pan said Wednesday in a keynote speech at the annual, you guys know I can't pronounce it, Luzhuazhu Forum in Shanghai. Pan said there have been discussions around the world on how to reduce excessive reliance on a single currency, adding that the yuan's global status has risen in recent years. Confidence in the U.S. is waning after months of President Donald Trump's erratic policy making. Investors have been trimming dollar holdings of late, prompting European Central Bank President Christine Lagarde to talk about a potential global euro moment. Since Trump reclaimed the White House this year, the dollar has lost more than 10% of its value against the euro, pound, and Swiss franc, and is down against every single major currency in the world. Pause. First of all, a few things. Everyone is acknowledging we're making a regime change. A common theme in these shows I do is you're never going to go outside and see a blip in the sky that says the world is changing, hurry up, go buy Bitcoin. That's not going to happen. It's going to happen at the margins every single day. Every single day. And then one day you'll wake up and Bitcoin will be $1 million a coin. Gold will be 80% of central bank reserves. China's global trade surplus will be neutralized because neutral reserve assets will be accurately priced. And you'll be like, what the hell? I was listening to Jack's show this whole time. I didn't know that it was happening. I'm telling you right now, it is happening. How many FT articles, how many Bloomberg articles, how many Trump interviews, how many price charts do I have to show you guys? It's happening. It's happening. And the funny part is at the bottom here, what we've been saying on this show, Bloomberg thinks it's a bad thing that the dollar is going down. But we've been saying this is part of the plan the whole time. How do you bring back manufacturing into the United States? How do you compete again as an exporter? How do you debase your way out of the debt? The dollar has to be weaker. So the last part, since Trump reclaimed the White House this year, the dollar has lost more than 10% of its value against the euro, pound, and Swiss franc, and is down against every major currency in the world. That's been part of Trump's plan. We've been saying this over and over and over and over again. It's debase, and debase your way against what? What they didn't include is how much the dollar is down against gold or how much the dollar is down against Bitcoin. 10%, those are rookie numbers. The dollar's down 60% against Bitcoin in the last year. It's all happening. Expect a weaker dollar. Expect people to sovereignly hold their gold and their Bitcoin. Expect reserve status to move away from the euro, to move away from the dollar. Dollar reserve status is below 50%. Gold is 20% and is now in second place. Bitcoin is outperforming gold. They're saying the quiet part out loud. Next. The last kind of chapter for me in this Mailbag Monday. Oh, whoops. How do I get my head out of the way here? Is this idea. So I see very often, all over Twitter today, now that there's some peaceful resolution, it looks like Trump is going to find some agreement with Iran. He pressed the right buttons. He dropped the right bombs. And hopefully the world finds some peace. And markets are very excited about that. So I see this tweet from this analyst. SPY closed up 1% today, running out of doors for this meme. And it's, the stock market after everyone said to sell America, or when everyone said it won't last, or sell in May, June gloom, Trump and Elon got in a fight, and now the Iran war, and the S&P 500 just keeps going up. Number go up. Let's go, let's go, let's go, let's go. Remember what I said. What is your measuring stick? Hear me out. Bitcoin is the hurdle rate. Stop comparing things like the S&P 500 in dollar terms. Everything is going to keep going up in dollar terms. I've said this. This microphone, this water bottle, my webcam, everything goes up in dollar terms. Next year, everything will be more expensive if you price it in the dollar. Your groceries, your oil, everything. So I hate these memes because people think about the stock market the wrong way. They're getting suckered. Let me explain. This is the Brooklyn Daily Eagle on October 24th, 1929. Great Depression, baby. Great Depression, baby. Because here's the deal. Everyone's always asking me, Jack, if you think, hold on, hear me out. And Clippers, clip this and send it on Twitter because this is a big one. Everyone's always asking me, hey, Jack, if Trump's official policy is America first and telling China, get their money out of the country, get your money out of the stock market. And what he's saying is he doesn't want global trade flows to be reinvested back in this country. He wants America to be able to manufacture stuff again. We're moving away from a system where dollar and dollar-based assets have artificial strength because of their reserve status. And everyone goes, well, isn't the stock market then going to have to go down? And I say, yes, absolutely. And they say, but Jack, it keeps going up. Aha. Going up in what? Brooklyn Daily Eagle, October 24th, 1929. The Great Depression. The DGIA hits its lowest point on July 8th, 1932, 89% below its September 29th peak, defining the most significant bear market in Wall Street's history. The market would not return to its 1929 high until 1954. The Great Depression. So the stock market down 89%. And people say, but Jack, the stock market has not been down that much in recent memory. But Jack, the stock market keeps going up. Aha, but listen, and this is an idea pointed out by Luke Groman. In 1929, the dollar was backed by gold. So the stock market was down 89% in gold terms. That's why it was a real depression. You see? Let me show you. From 2000 to 2011, the stock market was down 89% in gold terms. So if you measured the stock market in gold, you already lived through a Great Depression, hotshot. You just didn't see it. We had a Great Depression in plain sight. How? Manipulation of the money. Manipulation of the money. Stop measuring things in dollar terms. Do you understand? What I'm saying is, yes, the stock market is going to get obliterated. Obliterated in what? Not in dollars. Stop looking at things in dollars. You're going to miss these things in broad daylight. The whole world has already lived through stock market crashes, just not in dollar terms. People say, oh man, my stock portfolio is up again this year. Weird. Why is my house smaller? Weird. Why can't I afford rent? That's weird. Why am I getting less groceries? That's weird. Filling up my tank is really expensive, but my stock market went up. No crash. Depends what you're measuring in. You understand? Here. The S&P 500 against Bitcoin over the last 5 years, down 81%. But it's up. I thought I just saw that Wall Street guy's meme. The stock market's been killing it. Oh, in dollar terms. What about food? Trump says there's no inflation. Oh, that's weird. Food's down 85% against Bitcoin in the last 5 years. What about housing? 86% against Bitcoin in the last 5 years. So my message to everyone looking at the stock market and asking me this question of, well, the stock market keeps outperforming. I thought you said it was going to crash. It is going to crash in Bitcoin and gold terms. It is crashing in Bitcoin and gold terms. We lived through a depression and a performance that was greater than the Great Depression, but no one batted an eye because they used the wrong measuring stick. Last video I got for you guys. Also, shout out this loyal listener. Looks like you were totally correct, Jack. Hey, I'm never I told you so guy, but I might have told you so. Let's listen.
Enhanced supplementary leverage ratio and will apply to banks like JP Morgan, Goldman, and
that could be an interlocutor that potentially when the president says there's an ultimatum where either you make that decision or we're going to make it for you. I think what comes out of this meeting could be very telling on where the president's thinking is right now.
Yeah, who wants to be the mediator? It seems like everyone's kind of raising their hands. Meanwhile, this story would be getting a lot more attention if it weren't for what's going on in the Middle East. U.S. bank regulators planning to lower capital requirements for the country's biggest lenders. Sources telling us here at Bloomberg they plan to cut the enhanced supplementary leverage ratio and will apply to banks like JP Morgan, Goldman, and Morgan Stanley. Julian Emmanuel is nodding his head along. And I have to say, this was possibly the reason why we saw a real rally into the long end of the Treasury curve yesterday, as people speculate that maybe this would open the door to banks owning more Treasuries.
Well, I go back to March and April when we were getting questions multiple times a day from clients saying, does the Trump administration actually not mind a recession in order to keep long-end bond yields suppressed? And we thought that was ridiculous, and the market figured out it was ridiculous in April. But the fact is that they understand very, very well, and they're going to understand it even more when the big, beautiful bill gets passed and the deficit continues expanding, that they're going to need to do everything they can to keep yields under control, and this is a big step.
Yeah, at this point, though, it's unclear why big banks would want to own more long-term treasuries at a time when so many companies have come out and said, actually, long-term treasuries are a risk asset.
Look, the liquidity provision function, however it evolves, is very central to this narrative of the United States remaining the premier destination for capital, and this is going to help at the margin.
Did you guys hear that last part? Hold on.
Understand very, very well, and they're going to understand it even more when the big, beautiful bill gets passed and the deficit continues expanding, that they're going to need to do everything they can to keep yields under control, and this is a big step.
Yeah, at this point, though, it's unclear why big banks would want to own more long-term treasuries at a time when so many companies have come out and said, actually, long-term treasuries are a risk asset.
Whoa. Talk about saying the quiet part out loud. What's her name? I got to go on this show. Wow. It's hard to imagine banks would want to own more long-term treasuries, considering the whole world says those are risk assets. I don't want to own that dog shit. The quiet part out loud. Guys, let me tell you something. Watching something go from that'll never happen to it probably won't, but it might, that's the big switch. We're watching things like people used to tell me, yeah, they're going to implement yield curve control, change the rules for banks because the 10-year is a piece of shit. Who are you? Some 30-year-old in a baseball cap? That'll never happen. Oh, but now it's, no, it probably won't because I asked my boss, but it might. Because they're saying the quiet part out loud. Wow. And that's where everything changes. Because it goes from, it probably won't, but it could, to, oh, it did yesterday. Like that. So the change you should always be looking for is it'll never happen to, well, now the analysts on Bloomberg said it might. Now the FT keeps saying central banks are losing trust in the United States. Now the head of the PBOC saying we're entering a multipolar currency world. Which, what does that mean? What other currencies? No, you're missing the point. It doesn't fucking matter. The point is the world we're in right now is over, finito, dead. The single polar dollar only world is behind us. It's over. It's gone. That's the point. What the future looks like, that's not what this guy's trying to say. The headline reads, the dollar system is dead. The headline reads, Trump needs rate cuts because he can't afford his debt anymore. We're living in a sovereign debt crisis. The headline reads, own your keys. Not your keys, not your coins. Not your ounces, not your gold. You understand? The headlines are reading, oh, those Bitcoiners? Yeah, that'll never happen. To, no, well, I read the New York Times and they said it won't happen, but it might. Man, we're batting 1,000 here on the Jack Mallers Show. I love you guys. This show is so much fun. All right, with that, let me get to some Q&A before I eat dinner. I just heard my girlfriend walk in. I can smell her on the ones and twos in the kitchen. Smell her food, by the way. She smells great. Don't smell her like that. She'd kill me if she saw this. She smells amazing. I'm talking about her food. All right, let's do some Q&A. I got some feedback that when I do Q&A, I should blow my face up so you guys can see my spectacular tan. Look at that. I'm looking like a chocolate chip cookie, baby. Sun's coming out in Chicago. All right, let me open the Q&A. If you guys need answers to questions, don't be afraid to ask. I've got team members, shout out Lavinia, who are monitoring your questions as I talk so that I can get to them at the end of the show. So if you have a question, there's no such thing as a dumb question. Please don't be afraid to ask. This is about education and having fun, and hopefully I can get to it. Okay, here we go. Macro. Is it true that the hash rate fell 30% right after the bombs dropped? If yes, what does that imply? Wow, I don't know if that's true. I will look into that. If that's true, then I guess that means someone's unplugging something. Iran was mining Bitcoin, or it could be a coincidence. I don't know. I can't speak to it though. I don't know if that's true. If that's true, that's fascinating. Maybe I can follow up on it next week. Next question. Are we in fiscal dominance now? Will the next bear markets be more muted and mostly driven by emotion rather than liquidity? On the first part, I would make the argument, yeah, we're in fiscal dominance at this point. I would say we have been in fiscal dominance, but it's in varying degrees. It just keeps getting more and more extreme as this story plays out, is my personal opinion. But to say like, oh no, on July 31st of last year is when we started fiscal dominance. It's kind of like, it's been a progressive story that as we become more indebted and as the system erodes and eats at itself, the level of intensity that fiscal dominance presents to drive the macro environment just grows. So I would say it's every single day that we wake up, we're living in more fiscal dominance than we were yesterday. And that's just kind of the reality of the situation. So I would say yes. In regards to bear markets, listen, I think every Bitcoiner that's been around for a little bit is curious about the 4-year cycles. Everyone just has a lot of anxiety of, when's my net worth going to drop by 80%? I don't know is the truth. Like anyone that tells you they know or thinks they have a good idea is a liar. But I think, there's no doubt that the market cycles are changing. This is the most unique Bitcoin market cycle I've lived through timing-wise. They've always been generally correlated to the halvings, and this one isn't. We're way out from the halving, and we're continuing to grind up. And clearly, Bitcoin is deeply correlated with global liquidity, and global liquidity doesn't look like it's slowing down anytime soon. So I will say that this cycle is different. It doesn't mean that this time is different. It doesn't mean Bitcoin's not going to enter a bear market. None of these things I know. I always err on the side of markets are ultimately comprised of humans. Humans are comprised of emotions, and emotions drive irrational decisions, and that's where you get euphoria, and that's where you get despair. It's kind of been my opinion, but there's no doubt that this cycle is different. There's absolutely no doubt about that. Next question on markets. I have most of my portfolio in Bitcoin and often worry about concentration risk. If Bitcoin fails, I'd be in trouble. Do you worry about your concentration risk? How do you feel about that? No, I have 100% of my portfolio in Bitcoin. Well, I mean, if I'm being candid, I have what? I don't know the split between spot Bitcoin, strike equity, and 21 equity. So I have equity in my businesses and then I have Bitcoin. But I treat it all as Bitcoin because it's all Bitcoin exposure, right? Bitcoin does well, strike does well, Bitcoin goes to zero, my businesses are zero. I don't worry about concentration risk. I love the Sailor quote that diversification is just taking money out of the winner. I know, like, Bitcoin is where I'm safest. I don't have to trust anybody. I know for a fact how the system works, that no one can debase me. And so I don't feel any more safe in anything else. And I consider every SAT I don't stack is just me taking money out of the future, me taking money out of the winner. So I don't worry about it whatsoever. Because also at the end of the day too, here's another thing, is just Bitcoins are time and energy and monies are time and energy in abstracted form. And I know in the like 0.00001% chance where Bitcoin doesn't work, I believe in myself to rebuild my life back. I don't consider my net worth as a form of like luck by owning the right things. I consider the things I have around me in my life a function and output of my morals, my ethics, my principles, my decision-making, my work ethic, my commitment to my future, my ability to lower my time preference. That's, so I have enough self-appreciation and belief in myself that if something were to go wrong, I'll be okay. And that gives me a lot of peace of mind to make what I think is just the obvious right decision. I don't make portfolio decisions and where to store my effort out of fear. Like, what if this goes bad? I make it out of confidence. Like, I know that this is the right answer. And I don't want to diversify out of the right answer. And so, but that's me personally. Like, listen, there are more people around the world that don't have 100% of their net worth in Bitcoin than there are the people that do. So, I'm obviously the weird one for now. That's just how I feel. I mean, to be clear, I don't have kids yet. I'm not married yet. So, my risk appetite may be larger than others, but, I have a lot of confidence in myself. And I just don't want to take any of my work out of the winners. I truly believe we're living through a digital gold rush. And at the end of the day, it's going to be whoever has the most Bitcoin wins. And I want to be a part of that future. I want to be a part of the wealth class that gets to, re-architect a better world. I want to be at that table and have a say. It's just me. What market cap do you think Bitcoin would have to reach for it to no longer be considered too high risk for the average financial advisor? I don't know if it's about market cap, because Bitcoin's a $2 trillion market cap right now. That's higher than, what's Amazon? What's Google? What's Apple? Bitcoin, when you think of it as, in financial assets, it's like fifth in the world. But financial advisors don't invest in four things, right? I don't think it's a market cap thing. I think it's just normalization, whether that's regulation, whether that's Larry Fink co-signing it. Like, when Larry Fink co-signed it, all of a sudden everyone was like, oh yeah, I love it. Like, no, you don't. You just suck up to Larry Fink for whatever weird reason, So I don't think it's market cap. I don't. I do love, when it comes to market cap, I do love the thought in my brain, this idea that, if gold was worth $22,000 an ounce instead of $3,000 an ounce, all of a sudden China's global trade is break even. I'm basically saying, in really fancy terms, the dollar's overvalued as the world reserve currency. So for gold to be worth $22,000 an ounce, that's a little under a 10x. So what's gold? $3,000 an ounce, which would be 30,000. So that's like an 8x, something like that. And so that, an 8x for Bitcoin puts it at $1 million a coin, but then Bitcoin would, I think, reach gold parity. So I think Bitcoin's got, a lot of returns left in it over the next, 5-10 years. Personally, as we kind of demonetize the dollar and roll into neutral reserve status, where we're settling global trade and hoarding our time and energy and, a mother nature based asset. That's how I think about market cap. So I think we'll get there, but I think it's less about market cap. I don't know. I think Bitcoin's got a higher market cap than Amazon. I'm sure financial advisors have Amazon in portfolios, right? Okay, wider industry questions. Thoughts on Pomp's new Bitcoin treasury company? I don't know. I kind of saw it briefly. Excited for him. Pomp was an early investor in Strike. He's been a useful guy. He's always picked up the phone when I've called. So happy for him. No, I mean, I think my focus is at 21 really for both my businesses, but I'll speak on behalf of 21 for now. We've got the attitude internally that, we just need to focus on ourselves. When you've got, the team we have, Tether, SoftBank, and the technology that we have, that we plan to bring to the market, we think we're unstoppable. We really like our chances when it comes to serving Bitcoin in the capital markets, owning one of the largest treasuries in the world. I mean, we haven't even got approved yet. Like for those of you that tweet at me about, 21 and CEP and stuff, just so you guys know, until the transaction gets approved, there's only so much I can say and there's only so much I can do. So comparing us to a Metaplanet or to a Strategy or something, these are companies that have access to the capital markets and are allowed to do stuff. I'm not allowed to do anything yet. So, we haven't even started, and we're third in the world with probably the best team and largest amount of capital behind us. So, anyway, I give all that context to say I'm happy for Pomp. I'm excited for him, and I'm excited that Bitcoin continues to be adopted in the capital markets. But when people try and compare me to Saylor, to Pomp, to, people want to compare me to others, and I just don't find a lot of benefit in that. To me, it's kind of like dilutive to my focus and, our energy as a company. Like our focus right now is getting the transaction approved and executing. So, outside of that, I'm not really paying attention to, what other people got going on, other than obviously if you're on Team Bitcoin, you're on my team and I'm cheering for you. Okay. Some Strike questions. Feature request. Any plans for Bitcoin interest on cash where you can earn interest on your cash deposits and interest paid out in Bitcoin? Yeah, we could do this. I actually think it's on our roadmap now because some people have asked for it. What's so funny is I don't know why you would want this feature. It doesn't make a lot of sense to me personally. Like I wouldn't use it. If you want performance on money you're holding, you should just buy Bitcoin. Like, if you can get 3% interest on your cash, but you can get 60% on buying Bitcoin, why would you own cash? I just find it interesting that Bitcoiners want interest on cash instead of just buying Bitcoin. Doesn't make sense. But, I've said frequently, I work for customers, thinking that I'm right all the time is the quickest way to go out of business. So, I think that this is somewhere on our roadmap. I don't know exactly where. To be clear, we can do anything, right? Like I think we have the most talented team in Bitcoin when it comes to building and shipping products. We've executed so well. I'm so proud of the team. Our products are in over 100 markets. We have, lending, brokerage, custody, wallet services, free withdrawals, no fee DCA. I mean, when it comes to focused Bitcoin financial services, I think pound for pound, we've got to be the most useful Bitcoin product in the world. You can no fee DCA, free withdrawal to cold storage, get a loan. We're available everywhere, Lightning. So I think we can do anything. It's just a question of what makes the most sense. I've never really understood interest on cash. That sounds like a Bank of America feature, not a Strike feature. But I could be wrong. I think it's on our roadmap. But for those of you out there, my personal advice, not that you need to take it, if you're looking for performance on savings, I wouldn't put it in a savings account. I would put it in Bitcoin. That's just me. When will Strike update their tax reporting, i.e. inputting cost basis? I think we have. Let me double check that. But I'm almost positive we have. So you know what? I get these questions all the time. So maybe the UI just isn't very good. Maybe we can improve the user experience here. But for those that don't know, you can get all your tax documents in the profile section of the app. And I believe on your dashboard, you can input your cost basis. Because to be clear, before next tax season, I need that feature. So we got to have it. Jokes aside, I think we have it. Whoever asked this question, if you wouldn't mind writing into support, I'll go check with the team as well. But if you write into support, I'll flag to the support team that you're going to write in a ticket, and I'll track it. Because I think we do, and if we don't, I'm on top of this one. But I'm pretty sure we do. It might just be a bad UI. It might be bad user experience. Good question. Okay, last question. Strike lending. Questions about Bitcoin-backed loans, availability in more states and regions outside the U.S. Everyone wants a Bitcoin-backed loan. I get it. I use the product. It's phenomenal, not to brag, but I haven't sold a sat since. Living on Bitcoin's pretty smooth. Availability is top of mind for us. If you work at customer support at Strike, you wake up, you have your coffee, and it's when Strike loans, when Strike loans, when Strike loans, when Strike loans. What can I say? Texas around the corner for us. A lot of the U.S. around the corner, and then world region around the corner. Around the corner meaning we're in the last week of June, so call it July. Really soon. Really, really soon. We're about to launch Strike Australia. So it'll be our fourth country with local currency support. So we have Strike US with the dollar, Strike Europe with the euro, Strike UK with the pound. We'll have Strike Australia with the Australian dollar. And along with that, we'll have a bunch of other world region features. We're looking to launch the ability to have a virtual US dollar bank account for our global users and launch lending in a lot of our global regions as well. And then trying our best to bring it to Europe and the UK. So, the problem is just regulation, right? In the United States, each state has different rules on money transmission and then on lending. So trust us, we're grinding. We're working on it. So a lot of these updates are, weeks away, a month away. And my hope is before the year is over, we got it everywhere. And we're coming for we want Strike Australia. I think soon after that, Strike Canada is, I had some meetings about Strike Canada last week. So we're going to keep grinding. We're going to keep grinding, keep our head down. If there's one thing about us and our culture, it's just proof of work. Like we just do not stop. Every month we try and ship, 5 to 10 meaningful things for our customers, whether it's new regions, new products, cheaper pricing. So yeah, July has a lot of new lending regions. July has a lot of, new global regions. Strike Australia is going to be a really, really big one. So we're excited. We're just going to keep pushing. That's all the questions I got. Well, nice episode. I enjoyed this one with you guys. This was great. Real quick, before I hang up, I love you guys. We crossed 1 million views on the channel, and we're well over 30,000 subscribers. How cool is that? Amazing. Hey, but I'm not a podcaster. Just wanted to say I appreciate you guys. This is pretty cool. I feel like the luckiest guy in the world sometimes. I get to travel. Man, I really am excited for my Prague keynote to come out. It was so emotional. It was a very raw one. And just the connection I was able to feel with, some of the audience. And I hung out for 3 hours after that, and whatever, took pictures, answered questions, shared stories. So I just feel super grateful right now and just super, grateful, happy, lucky to have the relationship I do with you guys. So yeah, if you wouldn't mind, subscribe to the YouTube channel. If you want to support me, it has nothing to do with my businesses. This is like my personal project that I hilariously am in love with. Every Monday I look forward to. It's awesome. So I'm trying to grow it like a little personal goal of mine. And I think it's so funny. Everyone comes up to me when they see me on the street or something and they're like, got to fix your camera, man. Or, you got to stop fucking up on the podcast. I just think it's so funny. So I really appreciate you guys. Hopefully our relationship never changes. We just have this weird, awkward, this dude in an empty closet that runs these big companies that no one fully understands, but you guys get me. Like, it's just the coolest. So, with that, I'll see you next week. Stay